All right, welcome back to Two Stupid Gas Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to talk about some of the recent kind of Michael Burry, Cathie Wood drama. And Cathie Wood mentioned how she remembered the dot-com bubble. So I want to do a little deeper dive and look at how she performed during the dot-com bubble.
Yeah, she's claiming she remembers it, right?
Yeah.
If you like this kind of this entertaining stock content, we are two stupid guys just trying to figure everything out. So let's get to it.
Yeah, love it.
Two stupid guys trade stocks.
All right, so I'm going to explain this little negative
thing.
What's that?
Were you into this? I'm going to start doing this now.
Yeah, I love it. So the negative 84.8% from the thumbnail. Unlike our Caskins Academy video, we're going to explain where that number came from.
Ooh,
I know, right? So ARK ETF, it was very funny because to me, I had never really heard of Cathie Wood until a few years ago. And all of a sudden, she's like this anointed saint of Hollywood. I mean, Hollywood of
nice.
Wall Street. Yeah. So it's like, all right, like where, but she's talking about like, being an economist back in the 1980s. Like, where's her backstory a little bit? Obviously the ARK ETF has performed, fantastically well over the last few years, 30% per year average return, pretty significant kind of year-to-year fluctuation. But, that's very commendable numbers. That's better than Warren Buffett's achieved over his career, in case you were not aware. But this is the top 10 holdings right now. And a lot of people have talked about this, about how, many of these companies are currently at a loss. Some, and the ones that are not are selling at pretty high PEs. Even the Coinbase, which is, probably arguably the most profitable at this point in time, is really tied to an asset, which is pretty volatile. Okay. But I'm not really going to talk about that. They just wanted to highlight, give you a backstory a little bit. So this is a graph here comparing the value of the NASDAQ 100 to the S&P 500, kind of, new world economy versus old world economy, theoretically, right? It's not that simple because there's a lot of really highly profitable technology companies within the NASDAQ 100 now. But, just in general, I want to give you a little bit of a backstory here. So we are definitely at a point where it's kind of, there are indicators that certainly remind us or even surpass the height of the dot-com bubble back in the 2000s, which Cathie Wood remembers, right? She was running a hedge fund at that time.
Supposedly remembers.
Yeah, she remembers. So Buffett indicator, another kind of valuation metric for the stock market in general. This right here, you're looking at the dot-com bubble back here right over 2000. And then, obviously at this point in time, we're significantly above that level. So the market definitely is extended, expensive relative to history, whatever you want to think about it from that standpoint. So, where exactly was Cathie Wood back in the bursting of this dot-com bubble, which she remembers? All right. She, after leaving this company Jensen, which she was an economist and started her career, she co-founded Tupelo Capital, a hedge fund. So that's where she was. The Tupelo Capital is still in existence. It's run by the other person that she founded it with, but she was only there for a short period of time. And this was a pretty, how do I want to put this? A pretty interesting time in in the development of kind of technology space.
Okay, yeah, no, it's definitely a lot of memorable things happened here.
Yeah. So I went back and I looked at the 13F filings for Tupelo Capital. So this is total assets under management. This is looking at the fourth quarter of 1999. This is the first quarter of 2000. This is the second quarter of 2000. And this was the third quarter of 2000. So over a period of about 9 months, she went from this peak of $1.359 billion in assets under management down to $206 million in assets under management, a loss of 84.8% in a matter of 9 months. Yeah,
and just to be clear, that's a hedge fund. So that means that the people's money that she has, there are rules, just like with Burry during the housing crisis. You actually can't leave. They can make it. Well, you can, but they can make it so you can't. Right?
Theoretically, I'm not really sure what their governing kind of documents were at that time and whether or not they locked the firm. But there was definitely a significant, market loss and drawdown. There's probably both components playing there. We can't control for it because, unfortunately, they don't disclose their returns, purely publicly. So we have to work back from the 13Fs and kind of try to surmise what the returns look like at that point in time. So like I said, you're looking at 84.8% drawdown between withdrawals and within market loss. We can't really determine which portion is which. So for those of you more visually oriented folks, this is what the graph looks like. Yeah, that's quite a nice steep decline there.
Nice.
So I want to look at some of the holdings in there. This isn't how do I put this? This isn't what Cathie owns today. Some of these companies are still household names that I want to respect. The two I highlighted in green here, both Apple Computers and Intel, I personally own at this point in time, which is kind of funny. And then these other two, the China Telecom and Sienna Corporation, were just a couple of random ones that I picked out to kind of illustrate a point here. She's pretty well diversified. She owns a lot of positions. This is only half of it. You're going to see the second slide here. This is the other half of her portfolio. Pretty wide kind of swath of companies. Some of these names you recognize, Yahoo, XM, Walmart. Walmart's definitely not.
Tiffany & Co. That's not very techy. Okay.
Yeah, exactly. ValueClick. How do you think ValueClick, worked out? I don't really know, but I don't think it's too good. Sun Microsystems, Singapore Press Holdings. You had actually a lot of investment in Asia back at that point too. Priceline.com. You think their valuations were anywhere near what they are today?
I'm going to say no for Priceline.
Yeah, I don't know. That was not what I looked at, but I looked at these four. Okay, so Intel, for those of you who are not aware, major manufacturer of CPUs. So this is the longest chart I could get from Yahoo.com, right? And this right here is the .com crash, if you will. Intel, as of 2021, has still not achieved the share price it actually once held in 2000.
Yeah, and before you say it, yes, they have a ton of cash.
Yes, yeah, it's hilarious to me that they at one point they're in the .com kind of bubble, sold for over $70 a share, and right now you can pick them up about $55 a share, and that is 20 years later with a lot of share buybacks in between and dividends along the way, of course, too.
A lot of share buybacks.
Yeah. Sienna Corporation. This is another one. This was like a networking kind of switching company along the lines of like a Cisco Systems, which is the line right beneath it. Sienna Corporation. This is their longest stock chart I could get from Yahoo Finance. Yeah, pretty impressive, huh?
Oh, so they're still a thing?
They're still a thing. They have like a $9 billion market cap today. At the height of this, they had like a $240 billion market cap.
I've never heard of them.
So I did a little bit more into their kind of valuation and where they're at.
Man.
Yeah, I know, right? Does this not remind you of ARKK?
Their PE is almost 3,000.
Yeah, PE was 3,000 by my calculations. Yeah,
it's not great.
So Sienna Corporation, they were growing very, very well, 78% year-over-year growth, right? Like, isn't that what people talk about right now with all these ARKK stock holdings? Is that, man, they're growing fantastically fast. I mean, like, it's true, they are. Many of them are. So 78% year-over-year growth. That's very, very respectable. Okay, that's fantastic.
Yeah.
So they peaked. This right here. This was the annual report was as of October 31st for 2000. Sorry. So I went ahead and used the share price of $793, $188 per share, which is what they were selling for that time, and they calculated a market cap based on the number of shares outstanding of $237.7 billion. Then I divided that by their total net income for that year, which was this $81 million. And that's how I calculated this 2920 PE.
They had a market cap of 240 billion-ish, and they brought in $81 million.
Yeah. Mm-hmm. Yep.
Oh.
Yeah. Impressive, no?
That's really bad.
Yeah. So it'd be hard to argue that Apple has not been a fantastic investment over the last 20 years. But if you actually look at this little peak here back in the .com bubble days when Cathie was invested in them in that Tupelo Capital kind of investment fund, it took them until 2005 to get back to the same level that they had achieved in during the .com bubble.
Right.
So
that's fair.
Yeah, I mean, obviously they grew phenomenally well from that point forward, but you would have had 5 years of no real returns.
Yeah, that hurts.
And this is a best case scenario in many ways. As you kind of saw the stock graph there for Sienna, where they just kind of came down and just never went back up. When you're looking at a company like Apple, which did fantastic well over the next couple of decades, there was a period thereafter of them hitting this price where there was no appreciation for 5 years. It was just flatline.
Yeah, it'd be really hard to hold through that, especially when you're seeing like other value stocks and stuff like that go up.
Yeah, I totally agree. China.com, another one of our holdings here, had $13 million in stock invested in China.com. So they ended up selling the portal, the main website, for $11.7 million.
So they're gone. They're dead.
The company still exists, but like their main business was sold for less than what Cathie Wood had invested in them.
Oh boy. Okay.
Yeah, I forget what year this news story is from, but it was quite a while later. She had already moved on to a new job at that point at Alliance Bernstein. Which, if you guys want or are interested, we could do a kind of analysis of her time period there at Alliance Bernstein, where she was a fund manager. This video right here, I just kind of really wanted to focus on her performance during the last like kind of major value reset, if you will, because no matter what you think, I think at some point you have to realize that gravity does still exist. There needs to be a valuation reset, and even if there isn't a reset per se, you're going to see a period of flat returns while the companies catch back up to the valuations that they've already achieved, and want to see what sort of effect that would have on performance.
Her biggest holding right now, if I remember it correctly, is Tesla, right?
Correct.
So what you're trying to say is you did all this, data analytics. You noticed that we had all this giant valuations for tech companies that some were a great deal. Like, for instance, Amazon went down to $6, and you see that Amazon, that thing with Jeff Bezos is like, we were still making good money, so we just kept going.
Yeah.
Now we're at that point where we can kind of have that happen again. And Tesla, for instance, looks like that could not a China.com thing. That's not what I'm saying.
No.
However, I'm thinking,
Yeah, so even if you believe in Tesla's long-term bull case, you very well could run into a period like Apple did there, where you have no real returns on Tesla for 5 years.
Well, I'm seeing more of an Intel situation here, where if the stock drops due to the fact that what's their most profitable asset, Vinny?
Tesla?
Yep.
Business line? You mean the automobiles? Oh, I'm sorry. You're talking about the actual
the thing that actually makes them money.
Pollution credits or Bitcoin?
Pollution credits, and then second is Bitcoin. Cars they still don't make money on.
Yeah. I mean, I think they were finally profitable without the pollution credits in the most recent fiscal quarter. I'd have to look at the numbers, but
I have to look at that. But
they crossed that line.
I do know that now every auto manufacturer is now putting out all these EV cars. They're not going to be able to sell their pollution credits. I'm seeing that as the most extended tech company that's most poised for a crash. We could have a little bit of a repeat for Cathie Wood's ARK here, maybe in the next couple of years.
Yeah, I mean, maybe. That's certainly this is the kind of stuff that I think Michael Burry is looking at when he's buying those puts against Tesla and those puts against ARK ETF, is that these valuations have just gotten like astronomically high, and I completely understand that their money is competing right now for any sort of return whatsoever because there's just so much of it washing the economy, but still gravity at some point does actually exist.
Right. Yeah. No. Everything's way too high right now.
Yeah.
All right. Good stuff.
All right, guys. So let us know down below. What do you think? How successful do you think Cathie Wood is going to be in the next valuation reset? Will she outperform their 84% loss?
Let's say 1 year timeline. How is she going to be successful 1 year from now?
That's a good question. I don't know.
There we go.
All right, we'll see. I'll catch you in the next one.
Have a good one, guys.